I'm Jeffrey Thompson. Real quick, about me. I am an EA, which is basically a lot of people will say, I'm like, no, I'm not a CPA. Real quickly, because it is relevant, CPAs study accounting. They take a four-part licensure exam with their state licensing board, and they are very good at doing very specific accounting things, and sometimes they specialize in taxes. Not all CPAs do taxes. EAs take a three-part licensing exam given by the Department of the Treasury. So we specialize in taxes, and then usually do something specific within taxes. So I do a little bit of litigation here and there. So the other side of my credential, the USTCP, that's a U.S. tax court practitioner. So I'm a non-attorney who is admitted to the U.S. tax court bar. The U.S. tax court bar is one of two courts that allows non-attorneys to join their bar. Yeah, that's what I do. So I'm approaching things from the perspective of someone who deals with audits, appeals, collections, and also the occasional tax court case, and thinks, hey, if I were having to argue this in front of a judge, would I be able to do this without sweating profusely, right? So that is my perspective, and hopefully that informs you as to why I think about things the way that I do. So there we go, an even better slide. I picked this one just for you because this is how a lot of us feel when we are dealing with taxes, right? So I already included all the stuff about me. Now that we're on the same page and on the correct slide, every time I do a lecture, I always like to provide my like, hey, if you don't get anything else from this lecture, here's what you have, right? So we could just start off with some takeaways. So nowadays, it's so easy to get scammed and defrauded. There are a lot of people who will try to separate you from your money, and they will take advantage of the fact that you are afraid of the IRS to get money from you, right? I'm sure that all of us at this point have gotten that very threatening, like, you will go to jail. I'm a sheriff. You have unpaid IRS taxes. And most of us know that that is a scam, right? But there are other ones that are real tricky. So just anytime it involves your money, just take a second, right? There is never a time where if you do not respond within 24 hours, you will go to jail. Actually, it's very hard, as we'll talk about a little bit later, to go to jail for tax things. So just be careful when people or letters or texts or anything like that make it seem like you're going to be in trouble. Also, be careful of things that seem too good to be true, right? There was an email going around, which was just basically like, hey, it's the IRS. And if you click this link and enter your information, we can process your direct deposit for your tax refund, right? And I had a client who literally clicked on it, filled out their information, and as soon as they clicked submit, they were like, oh crap, I just got defrauded, right? They weren't even thinking about it. And then they talked to me, and I was like, okay, this is what you need to do to get all your information protected. But anyone smart, rich, attractive. We all, I'm assuming those three things describe my audience right now: smart, rich, attractive. We all are liable to fall for the occasional thing. So just take a second. You can usually Google, what the thing is to make sure that it's not a scam. And then also ask a friend or have a trusted tax representative. So also be careful of TikTok and Instagram and social media. Weirdly enough, most people on social media don't care about your future. They are trying to get views, right? So they will disguise information and package it in a way that's eye-catching, which sometimes distorts the truth of what they are saying. right? So I recently saw something that was like, there's a new tax law that allows you to claim your, deductions related to your pets. And I was like, I read tax laws all the time, and I haven't seen any new tax laws. And basically, they were just recycling things that already were in existence and distorting the truth of them, right? So, for example, they would say, like, well, technically, it's not your pets, but if you have an office and you have, dogs that are there for security, that's a deduction, right? Or if you have a farm and you have like herding dogs, that's a deduction. That's not the same as a brand new law. So, just be careful of information and people trying to steal your money, right? If you do get into a little bit of trouble with the IRS, it happens, right? People get audited, people owe for a couple years or they forget to file. Don't feel bad. It happens to everybody. Just try to take steps to correct it, right? The worst thing that you can do when the IRS is sending you letters is to ignore them. That's how problems get worse, and then just try to do a little bit better every year. The tax laws are complicated. Filing is difficult. It's very stressful. And every year you'll probably see that there was something that you could have done a little bit better. Don't beat yourself up over it. Just try to do a little bit better, right? So I'm going to proceed with the rest of the discussion. And just so you know, I'm not going to be able to cover everything. I wish I could, but you wouldn't really want to hang out with me for multiple 16-hour days of just talking, or maybe you would. But unfortunately, I don't have that much time today. So my goal is to give you some broad strokes, which will cover a lot of the things that I think are most important. And then we'll have time at the end for questions. So, record keeping. This is the thing that stereotypically artists and art adjacent companies aren't always the best at, but you know what? A lot of people aren't great at it, right? So record keeping, there isn't a specific way that the IRS or the California Franchise Tax Board wants you to do it. The important thing is that you just need to be organized, right? The way I like to explain it to people is, if someone were to ask you, can you show me, how much you spent on Adobe Creative Suite during the year, right? Or how much a certain person paid you during the year, or how much they paid you during a specific month, right? How long would it take you to get that information? The systems that you develop are going to help certain information be easy to access or hard to access, right? If you have a bunch of receipts and invoices in a shoebox, then that might take a little bit more time than if you had one shoebox per category, right? Even better, a shoebox per category per year. Even better, something digitized, right? Going towards QuickBooks or some accounting system that will really allow you to keep things organized. You don't need to spring for expensive software, but it can be helpful, right? The Just because you spend more on software doesn't necessarily mean that you're more organized. I've seen many people use software and use it incorrectly, and it's caused more problems than had they not. So essentially, what you need to do in preparation for your taxes is know how much you made and know what documents are related to that income. So, for example, W-2s, 1099s. With 1099s, you have ones that you can get for being a contractor, 1099 NECs. You have the ones for interest, dividends, for stock sales, right? And then also you have your deductions. So, can you prove how much you paid in mortgage interest or property taxes? How much you spent on medical expenses. And then we also have business expenses, right? So a lot of us are businesses, even if we don't have LLCs or S corps. And we have business expenses that we need to keep track of. I'll talk about the expense categories later, but having a way of making sure that you're keeping track of things, because it's so much easier to, every week, 2 weeks, or month go back and organize things as opposed to in March, when your tax accountant is like, hey, you're gonna get that stuff to me, and you're trying to remember, you have a faded receipt from March, and you're trying to remember if that was a business meal or not, right? So finding ways of keeping yourself organized so that everything is, just clear and easy to compile at the end of the year. Before I used QuickBooks personally, I had everything in an Excel sheet, and I just had, the date, the category, like the description of what the thing was from like my bank account, the actual like tax category, advertising, contractor, whatever, and then the expense or the actual amount, right? And then I could just sort. And then it would be easy to see, okay, these are all my advertising expenses. These are all my contractors. These are all my supplies, office expenses, right? And that did the job for a very long time. But then eventually I moved to QuickBooks because when you're an accountant, they give it to you for free because they steal your money in other ways. Intuit, great company. If anybody from Intuit is here, love Intuit. Please don't up my rates. Inflation is killing me. So when it comes to income, the question is always, what is taxable? So the general rule is if you receive money, it's taxable. The caveat to that is there are some exceptions, right? So the most common exception to this is when you receive a gift, right? So a lot of people will argue about what a gift is. And a gift is when you receive something and with no consideration, right? So something is received, nothing is given in return, right? I occasionally work with people who do escorting, and I've done some consultation, and sometimes they'll say, I provide services for this client, and then they give me a gift. And I'm like, that is not a gift. That is, and also, get a lawyer looped in because, depending on the state, there can be some legal issues. But if you are providing a service, and you would be pretty upset if you didn't get the consideration for that service, then it's not a gift. So now, if in addition to after the service, somebody's like, hey, thanks a lot for those services that you provided, then that would be a gift or a tip, right? So it can get pretty finagly around like legal definitions. But the best thing to assume is if I receive it and I'm, doing something for it, then I am probably going to have to pay taxes on it, right? So some people think, oh, well, they didn't send me a 1099, so I don't have to report it. You do have to report it. Well, no, you don't have to report it, but if you don't report it, then you're technically committing tax fraud. And as, an officer of the court, I can't like tell you to commit tax fraud. So please don't. And if you do, don't tell them that I told you to do that because I told you not to do that. So, and don't take an AI version of this and make me say that it's cool to commit tax fraud because I never said that. Other types of income, right? Sponsorships, affiliate income, gifted products can sometimes be a problem for influencers, because sometimes, they might say, hey, we're going to give you this gift, and in return, could you write a review of this, right? Well, if you're getting a gift, but they're asking you to do something in return, then they're actually paying you. And then that gets kind of complicated because then you need to report the fair market value of the gift that was given, right? And then you're taxed on that. All bad news. Everybody's angry at me. They're just like, do I have to amend my taxes now? Don't worry about it. Just start fresh next year. But if you want to amend your taxes, you probably should. But yes, the general rule, basically everything is taxable unless an exception applies. So when it comes to business deduction, people sometimes confuse itemized expenses with business deductions, right? Or itemized deductions and business expenses. Um, Itemized deductions, every year you can take either the standard deduction or you can itemize your deduction. Itemized deductions are personal expenses. So, for example, medical expenses, property taxes, certain state taxes, charitable donations, things like that, right? If all those add up and exceed the standard deduction, then you itemize your deductions and you're taxed on less income. Business expenses are a separate thing. So if you are either a 1099 contractor or you've formed an LLC or you have an S corp, if you are a business, right? If you are doing things in exchange for money, then you are a business, right? We'll talk about like the business versus hobby thing later because that is a consideration sometimes, but that is what a business is, right? So somebody just pays me $500 to, do one tax return. I haven't registered with the city. I haven't formed an LLC. I just did it and somebody was willing to pay me $500 to do it, right? I'm a business. And as a result of that, even though I haven't done anything, even though I don't have a business license, I still have to report that business income and I'm entitled to deduct expenses related to that, right? I really like the phrase used in the law, deductions are a matter of legislative grace, but it's important because you are not entitled to lowering your taxable income. There are laws that allow you to do so, right? And one of those laws defines expenses as things that are ordinary and necessary for doing your business. So, ordinary means if you asked 10 people on the street who do that same thing that you do, if they incur that same expense, right? Most of them would say that they do. Tax people, we pay for software. Artists pay for art supplies, right? There are things that are normal for your business. And then necessary doesn't mean that you couldn't do it without it. It just means that it makes your job a little bit easier, right? I can do my job without tax software, but I would hate my job because calculations by hand are lame. When you're thinking about deductions, right, business deductions, you have to think about does it follow this rule? And then there are certain caveats to certain types of expenses. We'll talk about travel and meal expenses in a bit, but those have higher substantiation requirements. So you can't just say, oh, I probably spent $3,000 on travel. No, you need to have, proper receipts. You have to be able to substantiate that you actually had business travel and was necessary for your business. The other key thing is watching out for personal expenses disguised as business expenses. I have to occasionally remind people that, if you go out to eat with a friend and then they ask you how was work? And you're like, oh man, work really sucked. I don't even want to talk about it. You don't get to say, well, I did bring up work, so now it's a business deduction. No, that's not how it works, right? If you are traveling and while you were traveling, somebody emails you and you answer that email, you don't get to deduct the entire trip to as a business expense, right? So you can't hide personal expenses under business expenses. If we have time, I have a hilarious story from a recent tax court case about somebody trying to do that, but only if we have time because I want to make sure we cover everything. But it's very gossipy. If you like tax chisme, then this is for you, right? The question I always get is, what are things that I can deduct? So I'm going to list a bunch of them. Any advertising expenses, right? Casting or listing pages, paying for your business website, business cards, if you're doing any social media advertising, right? those fees deductible. Any commissions that you pay either to your agent or manager, or if you are being having things sold in a gallery and you're paying a commission that way, those are deductible. Bank fees, if you have a account specifically used for your business, deductible. And then contractors that you pay. If you pay someone more than $600 a year, you have to send them a 1099 by the end or by the end of January of the following year. So if you paid anyone more than $600 this year, then by January 31st of 2026, which is closer than I'm comfortable thinking about right now, then you would have to send them a 1099. So always get a W-9 from people before you pay them because you don't want to try to, on January 28th, try to get somebody to sign a form. Because weirdly enough, people don't want to sign W-9s because they don't want the IRS knowing how much they made. Tax fraud. So that's my catchphrase, tax fraud. It's not a good one. One fun fact, that threshold is going to increase to $2,000 starting in 2026. So if you pay someone, $17,000 in 2025, you have to send them a 1099. If you pay them 1,700, 1,700 in 2025, you have to send them a 1099. Next year, you wouldn't have to unless it exceeded $2,000. Equipment that is purchased during the year, right? Computers used for work. A lot of artists have really cool tablets that I'm jealous of. All those things are deductible. We don't have a lot of time to get into depreciation, but essentially, sometimes with certain types of equipment, you don't deduct the full expense in the year that you purchase it. You deduct it over multiple years. That's an accounting thing. If anyone has questions about it, I can get into it, but just know that equipment is deductible. Insurance, so if you have general liability insurance or insurance for your business assets, that's deductible. Health insurance can be deductible, but there are some rules to it. And car insurance isn't deductible directly on your Schedule C, which is where you report all your business expenses. Then also legal and professional fees, but usually not the cost of personal tax preparation. Office expenses, including software and supplies, shipping and postage, rent and lease, not for your personal home, for a separate area, repairs and maintenance of business equipment, parking, supplies, including props and costumes. We'll talk about business clothing in a bit, but you are limited on what you can deduct when it comes to clothing, and then also local business taxes and licenses. This includes the annual $800 LLC tax that you pay if you have a LLC in California. Travel expenses, as I mentioned, you have to substantiate them. Meals, not just any meal. So earlier today, I made myself a little bit of soup because I'm feeling a little under the weather. And I was having soup while working on tax returns. But that is not deductible because even though I'm eating while working, it's not a business meeting. Now, if I went out to Soup R Us, and I were to have soup with a client while discussing the fact that they owe $500 to the IRS, then that would be deductible because it's a meeting with a client for a specific business purpose. So some people take advantage of this and they make sure that they are every time they're eating, they're having a business meeting with a client. But I don't like people that much. When I'm eating, sometimes I like to be alone because if I am slurping soup and it gets on my shirt, no one will know except for me. And that's why it's being shot from the neck down because everything below my shoulders, soup stains. So cell phone, if you use your cell phone for business, you can deduct a percentage of it. And then research, I say be careful because with artists, we get to do some fun things for research, right? You're writing a, movie about the mafia and a hot new Scorsese film hits the theaters. You can watch that movie and deduct the cost of a ticket as a research expense, right? That is legitimate. Now, if you pay for 10 of your friends to also see the movie with you, and that film that you were writing is just like an idea that you maybe had that you might write someday and you never actually write something, probably not a legitimate expense. But we have the ability to deduct some really fun things for research, right? Now there is a difference between research, which is for the purpose of developing something, and entertainment, which is like I'm showing a client a good time. So taking a client to a movie, not deductible. Watching a movie because it's helping you understand how you want to write a similar movie, deductible. Classes and workshops and dues, deductible. And then gifts, not to exceed 25 per person per year, right? There are some weird rules, and I'll just cover them real quickly, but I can go into them a little bit more in depth later if it's helpful. So car expenses, if you want to deduct any business use of your car, you need to have a mileage log. There's no equivocating on that. You either know how much you drove for business or you don't, right? The simplest thing to do is to keep track of all the miles that you drove during the year and take what's called the standard mileage rate. I believe for this year, it's 70 cents per mile. So let's say you drove 1,000 miles, you multiply that by 70 cents per mile, you get a $700 deduction on your tax return, right? As the other way to do it, which is more complicated, is you keep track of all the miles that you drove for business, all the miles that you drove during the year, and then you get I forget what the math term for the product of a of division is because it's been years since I've been in the fourth grade. But you get whatever percent that is, and then you multiply that percent by all of your business expenses. It requires a lot more bookkeeping, and for most people, you're going to get a better deduction taking the standard mileage rate. So at the very least, keep track of all the miles that you're driving for business. Home office expense is similarly kind of complicated. You need to have a space in your home that is exclusively used for work. There cannot be any mixed use at all, right? The prototypical version of this is I have a two-bedroom apartment. One bedroom is an office. The other bedroom is a bedroom. I only use the office for office work, right? So I take the square footage of that space, the square footage of my total home, divide that, take that percent, multiply that by my rent, my utilities, or if you have a home that you own, mortgage, interest, property taxes, utilities, etc. So that is how you deduct your home office. The With my artist, sometimes appearance-related expenses come up, and I totally understand. I have a lot of clients, real buff dudes, right? The buffest dudes you've ever seen. They're going to the gym every day, multiple times a day. They spend more time in the gym than they spend at home, right? Their persona is around being a buff dude, but their gym expenses are not deductible because the IRS still considers it a personal expense, right? Clothing that you have to wear for work. Lawyers try to deduct their Armani suits all the time, not deductible. Even though you're expected to dress nice, it's still considered a personal expense. The only times when clothing is deductible is when we're talking about like a specific costume, right? A Jane Austen period dress, a inflatable T-Rex costume, a clown costume, things that aren't suitable for normal wear. And with makeup and hair, if it is something that is not related to your everyday. So you have to, there's some argument to be made with certain things. But let's say you need to get or stage makeup is like the best example of that, right? Where the makeup that you use for your everyday life may be different than the makeup that you use for stage. So that would be deductible. Um, every situation is a little different, so that's why it's helpful to talk to someone. As mentioned, gym expenses not deductible. Also, fines and penalties are not deductible. So even though you got a parking ticket because you had to park at an expired meter and you couldn't put coins in because you're in the middle of the audition that was going to change your life, that parking ticket is not deductible. Great. The question I always get is a question that I unfortunately usually get too late, which is how do I maximize my deductions, right? Once it's time to file your taxes, once the year has expired, you can't spend more to lower your tax bill. The only times that you can spend more to lower your tax bill are if you're contributing to an IRA or a SEP IRA, right? There are two aspects to maximizing your deductions, and one, the most boring thing, is having a good bookkeeping and record keeping system. If you keep track of everything that you spent, then you won't have missed any deductions. Unfortunately, now, it would make my job so much easier if I knew everything that all my clients spent during the year without having to look at a receipt. Because I just be like, hey, don't even worry about it. 100, 700, 800, done, right? I have tried that, and they've told me that it's tax fraud. So you can't just make up expenses. You need to have proof of those expenses, right? So when you're looking at maximizing, you want to look at, well, have I kept track of everything that I've spent? Have I lost, was there a car that I had expenses on that I wasn't keeping track of? That's the best way to ensure that you're paying no more taxes than you actually need to. Also, make sure that you are assembling a good team. When you're on the lower end of the tax bracket, having monthly bookkeeper may be an expense that you can't afford, right? But if you are making high six figures and you're just like, I still want to do all the bookkeeping myself, I would say you shouldn't do that, right? Because your time is much more valuable than however you would pay a bookkeeper, however much you would pay a bookkeeper for, right? The big tip to growing your business is find someone who can do things either cheaper or faster, right? If both, even more amazing, right? Know the value of your time, and you don't have to do everything. I know a lot of people who want to know everything about how taxes work, and I respect that. But also, I spend way too much time reading tax court cases, going to tax conferences, and I still don't know everything about taxes. Sometimes somebody will be like, hey, so do I need to file this form, blah, blah, blah? And I'm like, let me see. And then I have to Google it because I've never heard of that form before, right? I've been doing this for a decade, and there are still forms that I've never heard of before. So, if you are expecting that you're going to know everything about taxes or bookkeeping or accounting, then you should just become an accountant, but you don't want to do that. Or maybe you do. It's never too late to switch, right? So find good people who can work with you and support you so you can focus on the things that you're most excited about doing it. It's also just a great tip for being happy, right? And then spend money in ways that will help your business grow, right? One quick tax planning tip. If in December you know that you need to buy a new computer by March, buy that new computer early, because then you get the deduction when you file your tax returns in the following year, right? When you push expenses into the current year, you get the deduction, and then you still have the thing that you need, right? Don't overdo it and spend like $50,000 and put yourself into massive debt just so that you don't have to pay any taxes, because then the credit card APR is probably going to kill you. But yeah, that's my general tax planning advice. So a lot of people worry about the hobby versus business thing. Now, the myth that I hear, and I hear different versions of this, is if you operate at a loss for 3 years, the IRS will come and shut your business down. That's like the most aggressive version of that I've heard. I've also heard if you operate at a loss for 3 years, you'll be audited, or you'll go to jail, all those fun things. Um, Let me just quickly explain the rule. In general, right? If I say that I'm a business, then the IRS will just assume that I am, right? I don't have to prove that I'm a business. But if you look back in 5 years of me having a business, if 3 of those years I'm not profitable, then the IRS, the burden of proof shifts from them to me. So I now have to prove that I'm a business and not a hobby. So the difference between a business and a hobby is when you are a business, you can deduct business expenses. When you're a hobby, you cannot deduct expenses, right? So as a business, if I spend 1,000 or make $1,000, spend $2,000, I get a $1,000 deduction on my taxes. If I'm a hobby and I make $1,000 and I spend $2,000, I report $1,000 on my taxes, right? So it can make a little bit of a difference. And there are actually sometimes when it may be more advantageous to actually be considered a hobby. But in general, right, you want to be able to deduct those business expenses. So I tell people, don't worry about like the IRS coming and like shutting your business down or waggling their finger at you, because that's only an issue if you are audited, right? And if you are audited, there are ways to prove that even if you operated at a loss for several years, you were still a business. Especially with artists, I've seen people go from 6 figures to negative $20,000, right? So it happens. It's very up and down. So there's an understanding with the IRS, with our industry, that some years are really great and some years are really lean. It doesn't mean that you stopped trying. So a business, just so you know, and I kind of alluded to this earlier, if I go to the corner, put a little stand out and say 5 cents a glass of lemonade, I'm a business. Even though I haven't registered with the city health inspector or gotten a business license or formed an LLC, I'm a business. When you are doing an activity or selling a product with the intent to make a profit, you are considered a business, right? Very low threshold. A lot of I have to when I have new clients, they will say, "I'm not a business." I'm like, "Actually, you are, because you made $10,000 doing a service." You don't need to have an LLC or an S corp or a C corp to be considered a business. Those are forms of business entities, but by default, you're considered what's called a sole proprietorship, right? You're a business if you are doing business things. I mentioned the consequences of becoming a hobby, and definitely make sure that you're conducting yourself in a business-like way. Some of the things that they might ask are, well, do you have, the required business licenses? Do you have a good bookkeeping system? Are you qualified to do this? Are you hiring people that are giving you proper advice? Are you changing your methods in an attempt to be profitable? There are lots of great court cases. I just want to talk about all the fun court cases that I read. But they do this, like, the courts will do this like long analysis of all these factors. And if you're like, yeah, I say that I'm a professional writer, but the last time that I wrote a script was 3 years ago. But in the meantime, I've incurred $15,000 a year in business expenses. The IRS may say, well, it doesn't seem like you're a business because you're just spending money on stuff and you're not writing things, which is the way that you would theoretically make money. But also, maybe you're not writing on spec. Maybe you've been having a lot of development meetings, right? So there's always a way to prove that you're a business, but they will be skeptical. Okay. A lot of information on this slide. Ignore the chart for just a second. A lot of numbers, but ignore the chart. One important thing for businesses, for sole proprietorships, and the thing that bums a lot of people out is in addition to your income taxes, you also have to pay what's sometimes called, or what's always called, the self-employment tax. Excuse me, sorry. So the self-employment tax is essentially your contributions to Social Security and Medicare. So income tax and self-employment tax are calculated in two separate ways. So your income tax is basically all of your income from all sources, right? Your business, W-2s, interest, dividends, stock sales, unemployment, minus any adjustments, so contributions to IRAs. If you're a teacher and you get that $250 deduction for teaching supplies that you purchased, things like that. That gives you what's called your adjusted gross income, which is the number that if somebody's asking how much money did you report on your taxes during the year, they're asking about adjusted gross income. You take your adjusted gross income, you subtract that from your standard or itemized deductions from that number, and that tells you how much income you're taxed on. So if you're a married couple and you make $20,000 total, the standard deduction is, I can't remember off the top of my head, $29,000, I think. If you make 20, you subtract 29, well, your taxable income is $0, right? So in that case, you wouldn't have any income tax due for the year. But let's just say that $20,000 was from a business. When your business is profitable, then you pay self-employment tax. Now, the calculation is a little bit more complicated than this, but just for the ease of it, let's just say it's 15% of your profit. So if you make $20,000, then that is, man, I really should have picked 10,000, 15, $30,000. Guys, I just need to let you know, I'm a little under the weather and I should not have like set myself out to do math in my head, but I think that's correct. I never, fun fact about accountants, people think we are just good at doing math in our head, but we almost never do. And we really never should because calculators are so much more accurate. $3,000, right? So even though you would owe zero in income tax, and even though you only made $20,000 during the year, you would still owe $3,000 in self-employment tax, which can be a big bummer if you only made $20,000. And if you can imagine, if you're making significantly more and you're making, $100,000 profit from your business, you're dealing with your income tax rate plus the fact that you also owe self-employment taxes. So that's why self-employed people tend to see tax bills that make them cry. In addition to the fact that if you're not making estimated tax payments during the year, then you're seeing a huge tax bill at the end of the year, as opposed to, if you're a W-2 employee and you have taxes being taken out every time you're getting paid, then by the time you get to the end of the year, most of that has been paid off, and sometimes you're even due a refund, right? So if you're self-employed and you're wondering why your bill always makes you sad, that would be why. And that's when you might want to start doing estimated tax payments. So I'm not a sales tax professional. I don't handle it because almost all my clients are service-based businesses, but it does come up. So I just want you to be aware of what the rules are for them. It can get very complicated because every city has its own sales tax rate and every state has its own rules on what income is taxable, right? And there's something referred to as nexus, which is, if you think about like back in the day, right? If I were a potter and I made the finest glazed pottery that you could ever see, more than likely I would have a little, mom and pop pottery stop, and people would come in to the city that I live in, and they would buy my pottery, right? It would be very rare that someone from Minnesota would order pottery from me. But now with the internet, I can sell pottery to people all over the world. And it's really cool and really unites us, but it makes taxes very difficult because then sometimes what you're running into is that states that you have never even stepped foot in are saying, hey, did you know that you should have been registered with us as a entity that's, selling taxes within our jurisdiction, and then you can get in trouble with a state that you have literally never seen and probably couldn't point to on a map because who teaches geography anymore? I'm seeing this for the first time. I don't even know what country this is. Is that Canada? I don't know. But the nice thing is most of the websites that you will be selling products through are going to deal with that for you. So Etsy, eBay, Amazon are going to take care of the remittance or the withholding of sales tax and the remittance to the proper state. So you don't ever have to touch a sales tax return. If you are doing it on your own, then you may run into trouble. So if you are, you have a Squarespace website or something like that, and people from all over are buying your products, then you may have some sales tax filing obligations. In that case, there are one of two routes to go. There are all these great softwares that plug right into your point of sale software that will keep track of everything for you and file it, or find a really good accountant who specializes in sales tax and can advise. I mentioned that just to say it's a thing that you should think of if you're selling products. But I am not the person to talk any more than just saying, hey, it can get really complicated really fast. Make sure that it's being handled in some way. Because it's a real pain to go back and retroactively try to look up certain jurisdictions and deal with it that way. I've done it once for one client, and it was just within the state of California, and it was about 30 cities, and it took me 4 or 5 hours to do. And it wasn't fun, so don't do it. Real quick, because at some point maybe you might not want to work as much. There are lots of options for that. So especially as a business, it unlocks two things that are not available if you're not a business. So you probably already know about traditional and Roth IRAs. Traditional IRAs are tax deferred, so you get a deduction when you contribute to them, but you pay taxes when you pull out from them in retirement. Roth IRAs are tax-free, right? You put money in, money grows, and then when you take money out, because you didn't get a tax deduction, you don't pay taxes on it when you take that money out, right? What you want to do is going to depend on what's best for your situation. That's why it's also helpful to have a good financial advisor. A lot of people think that financial advisors are very expensive and they, cost like $1,000 a month, and people won't even consider reaching out to one. There are a lot of financial advisors who basically just take a fee of what a percentage of what they invest. And if you compare that to literally putting money into like Betterment or Charles Schwab without like having an investor, you still are basically paying the same fee, but now you have like a friendly person who will like hop on a call with you and like remind you, hey, just because like the economy dipped a little bit doesn't mean that you should withdraw your entire 401k. Right. SEP IRAs and solo 401ks are great for self-employed people because you can contribute more. So some people in this meeting may see that you can contribute 70K max per year and go, out of what money? But it's an aspirational thing, right? Sometimes, and especially right now with the economy, it is tough to save for next week, let alone for retirement if we'll ever be able to retire. But if you can put a little bit away, then it's good to do so. And even if you can't now, thinking about how you can do so in the future, is a good thing to just have as a little footnote in your brain, right? I might not be able to do it this year, but next year, what can I move around in order to be able to meet those goals? And then don't forget about Social Security. Knock on wood, it will still be there when yes, I do have a piece of wood available for specifically for Zooms when I say knock on wood. Because my table is glass, so I say it every Zoom. So I just need a dedicated piece of wood for that reason. Don't question it. But Social Security will probably be around when we retire. People will be really mad if it weren't. Even though those self-employment taxes that you pay are a pain in the butt, do realize that those are things that you will draw from when you are of that age, right? I've seen a few people, unfortunately, they make a lot of business income, but they're very aggressive with all of their expenses, and then they show and when I say aggressive, I mean, you know, maybe some things on the some income wasn't reported and maybe some expenses were inflated, right? And then when it comes time to retire, they're like, well, I made all this money. Why don't I have any Social Security to claim? Well, you need to have had a business profit in order to claim Social Security, or a W-2 job, right? Either way, you need to contribute to the system to pull from it. Also, if you are planning on buying a house, you want to make sure to minimize your expenses and obviously report all of your income. So that's another tax planning thing. Sometimes, if you're planning on buying a house, you defer expenses to the next year so that your income is higher. Fun tips. Usually, I charge $6,000 for advice like that. For you, it's free because we're supporting the San Francisco Public Library and all the lovely people there. So, just to top things off, I deal with clients occasionally in all sorts of legal trouble. And it can be very stressful, but I just want you to know that there are things that you can do to get out of those situations, right? So, as I mentioned before, if you get a letter from the IRS or the California Franchise Tax Board or your city's business license department or whatever, don't, put it under an entire pile of papers and say, I'm never going to look at it. Look at it, read it, try to understand what they're saying. Half of the time, it's nothing threatening or scary. Sometimes they're just like, hey, you forgot to report, $300 in interest that you received from a bank account. So we just adjusted your refund and now you're going to get $2,000 instead of $2,100, right? So Sometimes it's not scary. Sometimes it's an easy solution. A lot of IRS letters are just identity verification, where something flagged in the system, so they just want to make sure that you are you. But if you don't comply with that, then you won't get the refund that you were due, which is a problem probably for you because you probably want that money. So don't ignore letters. But if you're being audited, audits are very stressful. Even when I'm not the person being audited, I feel the client stress because it just feels bad. You're being usually accused of doing something that usually you didn't do. But I like to think of audits as like just check it. They're like, hey, this thing seems odd. Just checking with you, is it odd? And if it is odd, right, the worst thing that happens is they correct the tax that you reported and tell you what tax is owed, some penalties, some interest you pay, right? If and a lot of people are like, well, if this doesn't go well, do I go to jail? No, you can go to appeals. You can also take it to U.S. tax court. There are oftentimes with audits that I deal with, I don't even try to win the audit because sometimes auditors are really, really mean, and they're mean to me. And I'm just like, you're not a reasonable person, but I build my case in the audit, and then we go to appeals or to tax court, and then it gets resolved there. Because I'm besties with the IRS attorneys. I call them like, hey guys. Let's just solve this case. Let's just take this off your debt. This is an easy one. Do you really want to take this to court? And then we just settle out of court. It's so easy. So just know that there are solutions. And if you are in a situation where you owe a lot of money to the IRS or even a little bit of money to the IRS, so you want to make a plan with them early. So definitely don't see a bill and do nothing. Respond to the bill. You can call the collections line. I'm going to just go through a few quick options and then we'll go to questions. If you are in like a crazy financial situation, right? You just lost your job. Someone also broke into all your bank accounts and took all your money. And you also identity theft, and you have all these medical expenses, and your credit cards are maxed out, right? And there's no way that you can even pay a dollar. Call the IRS, call their collections line, and you can request what's called currently non-collectible status. Basically, you're saying, hey, I'm in a crazy situation right now. I'm so sorry. Can you give me 3 months where you just leave me alone? And then they'll give you 3 months where they don't send you any threatening letters. They're not expecting you to pay. And then in another 3 months, they'll resume, right? So if you are in a situation where you just can't even figure things out, you can give yourself a little bit more time to figure things out. And then if the amount that you owe is too much and you can't pay it all in that moment, you can do what's called an installment agreement, which is just a payment plan, right? In the same way, you usually don't have to pay your credit card bill immediately at the end of the month. You can divide it up, but interest accrues. You can do that with the IRS, right? So if you owe $3,000 because of the dumb self-employment tax, you can do 300 a month for however many months that would be, including the interest that accrues, right? So a lot of people worry because they see the bill and they're like, I can't pay this all at once, but you don't have to. You have options. Last but not least is the thing that I don't like to mention because there's a lot of misinformation about it, but I want to clarify what that misinformation is so that you know, right? You may have heard of an offer and compromise, which, there are those commercials that are like, we settle, IRS debt for pennies on the dollar. There's this person owed $50,000. We got it down to $3, right? Now, does that happen? Yes, but that doesn't happen for everyone, right? If you owe $50,000 and you make $200,000 a year, the IRS is going to go, well, you might not be able to pay 50,000 now, but you could pay 10,000 this year. You could pay 10,000 next year, and then keep on paying that 10,000 until you're all paid off, right? An offer in compromise is only really granted if there is a situation where the IRS says, okay, look, we're not going to be able to collect any money from this person aside from the amount that they are offering, right? So if you are retired and you are living off of a fixed income, and you owe, $5,000, and you're like, look, I was able to scrape together some money from family. The only amount that I have is $500. And other than that, I have no other money to give. I can't sell my house because I live in it. And I really, my car is not worth a lot. They will probably accept that $500. But you can't, as a, young person making, I think the legal term is crap ton of money, say, yeah, I owe thousands of dollars and I make even more money than that per month, but just take $50 and let's call it quits. So I've talked enough. I'm going to stop sharing my screen, and I'm happy to answer any questions that may have popped up. Um, the ooh, uh, I see some great ones. Question for later. Is it true that I can get a deduction for my rent since I operate from home? Yes. That is the home office deduction that I mentioned earlier. So the essentially, if your business is profitable, you can take a percentage of that exclusively used space. So it can be an office space, it could be a storage space. Some people, will take half of their garage and use it as storage for products that they're selling. And then that percentage, so if it's 10%, you multiply that by your total rent, your total utilities, and then you deduct that. The only thing that you should know is if your business is not profitable, you cannot deduct those expenses during the year. It gets carried forward to the next year and it will keep on getting carried forward until your business is profitable. The software for bookkeeping that does not cost an arm and a leg, that is tough because unfortunately the one that I use and I'm most familiar with is the one that costs an arm and a leg. Julianne, did you have something that you wanted to add to that?
Oh no, I'm just
Oh,
enjoying
oh,
listening
sorry.
to your answer.
On the question thing,
Yeah.
it like popped up and said, okay,
Oh.
yeah. So I had someone recently tell me that Quicken, which is also an Intuit product, has a personal and business software that is significantly cheaper than QuickBooks. And they played around with it and they feel very comfortable with it. I would recommend it, but keep in mind that any software that you pay for is a business expense, so it does sweeten the deal a little bit. There's a question, are delivery fees taxable? I'm not sure if the question is supposed to be, are delivery fees a tax deduction, which they are. But if you charge delivery fees to a client, then you report that as income, but then you write off the actual cost of what you pay. So if, I charge them $100 for the product, the shipping is $20. I charge them that. I pay USPS $20. I'm only taxed on the 100 that I actually charge them for. So the great question about tax software being a business expense. So um, uh, if so the issue is when there is a personal when there's an expense that has a personal benefit and a business benefit, it can sometimes be hard to parse it out. And generally, the IRS is going to say it's personal, right? So with tax filing and tax prep, they're going to say, well, you need to file your taxes. That's a personal expense, so it's not a business expense. Now, the argument could be made that, okay, well, I pay for TurboTax Basic, which would be $200, but if I get the business package, it's an additional $150. So in that case, that amount is the 150 is business only, so you can deduct that extra amount. The issue with some tax prep. So I'm a flat fee tax person. So whatever you throw at me, it's the same rate, right? So because of that, my clients, and this is why I'm the worst and you shouldn't pay me to do your taxes, can't deduct the cost of my business tax fee because it's all mingled together. And you're wondering, well, why don't you separate it for your clients? Because then I would have clients who would say, well, then I'm only going to pay you this much because it's not that much work. And they're going to have like 26 W-2s in 7 states. So that's why. If anybody really cares about how I run my business. Nope, nobody? Nobody? Okay, great. Great question about clothing. So would manual labor type clothes be an expense, like needing padded knee rain proof pants for working in the garden? Yes. So those are things that you wouldn't wear in your day-to-day life, right? You might, but most people won't. So uniforms, specific protective clothing would not be considered a personal expense. Also, clothing with a business logo on it, you probably wouldn't wear that around all the time. Maybe you do for advertising purposes, but those types of clothes are considered deductible because they're only used for the business. The legal analysis is that it's clothing that has a business purpose, can only be used for business, and is only used for business. So if you were to wear your protective pants to the club on Saturday night, then you would lose the ability to deduct it. But also you look fly, so maybe it's worth losing the deduction. If I pay a family member or friend to help me sometimes, is that reportable or deductible? It depends. So if let's say if it's a business expense, right? So if as we've seen, I'm really great with slides and making sure that I pulled up the right one before I start projecting. I'm glad I didn't have my slide that's just all of my clients' social security numbers. Why do I have a slide of that? For safety. If I pay my little sister, who's a tech whiz and is great with TikTok, to get that all set up for me, well, that is me paying her as a contractor. I can deduct it as a business expense. She would have to report it as income. Now, if I have a friend who is helping me move or is helping me take care of dishes or whatever. And I pay them like as like, hey, like, thank you so much. You went above and beyond. Here's a little money, or I buy them pizza and beer or something like that. That's it's technically an exchange of services, but my argument would be more like it's even though they did something and then you later gave them a gift, that wasn't an expectation in the same way that like your friend buys you a birthday gift and then later you buy them a birthday gift of equal value. That's not an exchange, just two gifts, right? If it's something general like that, if it's just like a personal thing, not deductible. But if it's related to your business, then you should make sure that it's deducted as a business expense and it's reported to them as income. Um, I believe I paid around 2,000 for being a sole proprietor on top of the independent business tax last year. Is this a fixed fee no matter how much I make for the year? Sorry if I'm not specific about what the 2,000 was about. That does make it a little harder to answer the question. But if we're talking about because if you're an LLC, the tax can increase based off of how much you made. But the minimum LLC fee that you pay is automatic. So even if you make $0 as an LLC, you're paying at least $800. Other expenses that may be related to that could be related to some things that are optional. So, for example, if you're paying a service to act as like a registered agent for you and you use their address on all your business filings, that's not required. You could just use your home address. And if that didn't answer your question, rephrase it and ask it again. What is my opinion on using online tax filing services like TurboTax? I think of it as like getting an oil change or doing like any maintenance, right? So there are services that make certain things a little bit easier, and then there are like full services where you just hand them, you leave your keys and you're like, you take care of it, right? And it really depends. So the software is less important than like what you are comfortable with. So I have clients who literally have one W-2 and one kid, and they're just like, I don't want to do it. I don't want to even think about it, right? The most stressful day of my life is looking at this document and dropping it into your secure portal and then sending it off to you. I do not want to do anything more than that. And for them, they're paying for not having to stress about it, right? They drop things off, it's done. So one thing is just like, how much of it do you want to do yourself? Then the other aspect is how complicated are things? So those softwares are helpful, but sometimes, and I know that AI is cool and it's going to replace my job in 2026, but I'm old-fashioned. I'm getting old, guys. I like talking to a human. And sometimes when you have very complicated situations, it's just sometimes helpful. And even if it's not complicated and you're just stressed about it, I sometimes clients get emotional and cry a little bit, and I'm there for that. I do have a master's in psychology. I'm not a therapist, so I'm just like, at a certain point, I cannot help you anymore. Let's keep it to the taxes. But the in general, it's just a matter of like what like you feel like you need. Do you want to do it yourself? Do you want to have a professional available? Now TurboTax has like where you can call an accountant, and that's really great and really helpful. But try different things and see what works for you. And if you're working with a human, I didn't mention this before. We get very busy, and sometimes people are like, I emailed you this morning and I didn't hear from you. And it's like the day before the tax deadline. And I'm like, well, that's because I have 1,000 emails in my inbox. But have someone who's responsive, who's respectful. I get a little grumpy sometimes, and that's something I'm working on with my therapist. But someone should not talk down to you and like understand you and be able to help you. And thank you for all my clients who deal with me when I'm a little bit grumpy. I'm trying my best, but I'm only human. So when should I decide to make my business an LLC? Great question. Part of this is a tax question, part of this is a legal question. In California, $800 minimum tax, right? As far as a tax perspective, all it all an LLC does is make running your business more expensive. It doesn't offer you any additional tax savings compared to just being a sole proprietorship, right? That lemonade stand that I started, once I make Jeff's Lemonade LLC, I'm not saving more on my taxes. Giving California $800 more a year. Now, the legal consideration, and I'm not a lawyer, but if you need a great lawyer, Cal Lawyers for the Arts is a great organization. But the legal aspect is an LLC creates a separate entity, which can then protect you from liability. So let's just say, you are operating a restaurant where there is glass and alcohol and floors that people can slip on. You might want an LLC as opposed to being a person who paints things, where the worst thing maybe somebody tries to eat your art and gets a little bit of oil paint poisoning. Don't use lead paint. That's really when you'd want to talk to a lawyer and say, hey, I'm worried about my liability. Maybe also look into insurance. But unfortunately, I can't tell you from like a legal perspective what to do. But from a tax perspective, I always tell my clients, don't do it. S corps are different because you do get some tax savings, but S corps are kind of expensive. So to just summarize real quickly, S corps cost about $3,000 to $4,000 a year to maintain between extra tax filing and then the $800 tax that you pay to California and then running payroll. I always recommend hiring an accountant to handle the books because they're more complicated when you're an S corp. But once you're making around $90,000 to $100,000 in profit, the amount that you're saving in taxes exceeds the amount that you're spending. But if you are not, then it's a different calculus. But it requires a little bit of tax planning, and it's going to depend on your situation, whether that's right for you. I'm a gig
We just
worker.
got a
Yes. Ooh,
couple of questions that came through in the chat earlier. So
yes.
Julianne and I know we don't have a lot of time left, and you've been very generous with your time, very patient. So I was just hoping we could read out a few of those. And
Yes.
just
And
because
also,
people
if
are
we
gonna.
want to stay a little bit longer, I don't know if you two can, but I can do like a little just to, yeah.
Yes, if you don't mind, but we can also close right at 7:30. So just yeah, but we would appreciate it. We got a lot of questions, which I'm sure
Okay.
you're not surprised by. So
Yes,
yeah.
we're going to power through them. I do have to watch One Piece with my wife later, so just know
We don't want
we're at
get
a
in the way.
really good part of the arc. We're at episode 1016. We're so close to being caught up. So,
All right, all right. Well, we're gonna make the questions quick
okay.
then. Okay, so this is the first one we got through in the chat. For business travel, how do you split a trip that is business related, but it's also fun? Where is the line?
Great. I love this question. There's this really great court case, and I can't cite it. I'm so sorry. But basically, the judge said suffering is not a prerequisite to deductibility. So, one of the great things, because the IRS was like, well, they had fun, so it's not a business expense, but we're artists. Like, we have fun. Even like the administrative side of it is sometimes really fun. You're like, what did I spend? Oh, this was for the butter costume from Halloween last year. So if you do fun things. While you're traveling for business, if like you enjoy the conference or festival that you go to, there's nothing wrong with that. Here are just a couple of things to consider. So let's say I go to New York for that film festival in New York, Tribeca. I was like, cons? No, Tribeca. You can tell that I haven't been to either, but soon. I fly to New York. While I'm there for Tribeca, all my expenses are business related, right? Travel, hotel, airfare, meals, all business deductions. Now, let's say I meet some cool people and they're like, We have Airbnb out in Yonkers. Let's just like chill and like hang out. And I paid to rebook my flight, right? There's a $100 rebooking fee, and I pay them $50 for my share of the Airbnb or whatever. Those additional fees are not deductible, right? In the reverse, it's also true. So if I'm going to visit family and then they're like, "Hey, you do films? Did you know that Tribeca's right next door?" And I'm like, "Oh," and I decide to go. Well, I can't retroactively make it a business expense, but all the expenses incurred while at the festival are deductible. Mhm.
All right, we have an announcement in the background that's going off at exactly this moment. I'll read off another one and then Julianne can do it. All right, I'll be quick. If I make money some years and not much other years, do I file as a business in the years I'm not making money?
Yes, I would recommend filing in all years. So sometimes I have clients who say, "Oh, I spent more than I made. I really don't want to claim anything. It's not worth it." But when you claim those expenses, you're lowering how much you pay in taxes for the year. So if you like giving the government more money, which I've heard is real popular, go ahead. Technically, funnily enough, it is still a fraudulent statement, but they won't punish you because they're like, well, we benefit from this. I always say claim everything in every year that you're entitled to do it. Because also, if it's a really terrible year and your your total income is negative, it carries forward to the next year. So you never lose out from claiming expenses.
Okay, great. And our next question is, what is the minimum profit required before you have to pay the self-employment
Oh
tax?
my God, that's like a licensing exam question. It's $600. So $600 in profit. So if you spend, 1,200 and or make 1,200, spend 600, then you'd be right at that threshold for the self-employment tax.
All right, let me read out another one here. Let's see. All right, we have a slightly longer one. I live in San Francisco and city taxes are based on gross sale.
Mhm.
But if I sell a product, I need to pay for the product. Then there are third parties, middlemen who need to be paid. That is in addition to purchase price. Bottom line is my profit may be 20% of my sales price. If I sell for $100, gross profit looks like $100, but my actual profit is $20. How can I keep from paying $80 too much?
Yeah, it's Los Angeles also has the same gross tax. A lot of cities do, and I personally think that it's dumb, but I'm not the mayor, and no one has elected me yet. But unfortunately, it's the quintessential, and I'm assuming that you're probably also dealing with tariffs. So it feels like you're being squeezed from all sides. And unfortunately, if you can't get your expenses down, you have to raise your prices, which always feels icky and weird. But you want to look at like, well, what if my profit on 10 of these items is $20 and it takes me 10 hours to make that $20, well, I'm not really, making money that's going to help me live. So you're looking at it the right way. But unfortunately, it's just you could also maybe move out of the city, and I'm not recommending this, tax fraud. No, but and especially when you're like, there's this specific threshold, which is like, I feel like 30 to $60,000 of business income, where you're making theoretically good money, but you're getting your ass kicked so bad between city taxes and the self-employment tax that you feel worse off than someone who is making less than you at like a regular job. So sorry, I don't have better advice.
I think we just have one more question that came through the chat, but I know
Okay.
there's a few more in the Q&A.
Yes.
So I'll read off the last one. Do I need to keep physical receipts if I can see my past spending through online banking?
So you don't have to keep physical receipts, but I do recommend digitizing them. They're so it's it, it's a it depends question. I have won appeals without ever once showing receipt. But also I have heard of people disallowing expenses because there wasn't a receipt available. So it really depends on who you're getting, who's auditing you, and how good of a. I mean, it's not even sometimes the strength of the person who's representing you. Also, if you're ever being audited, don't ever talk to the IRS by yourself. It's the same as if you are being sued. I have seen clients attest to things and not even thinking about what they're saying. It's sometimes it can be expensive, but it's just worth having someone there to walk you through the process because I can always say, I don't know. I'll ask my client and then we talk about it. But if you're asked a question, then you may give too much information. But yeah, keep receipts and try to keep them for at least 3 to 4 years. But if you have like a huge pile of them, scan them, label them, keep them in a folder. It's so easy to do nowadays that, and it can be a pain with scanning, but the thing I always say is the worst case scenario is to be audited and not prepared. That's just it doesn't feel good. So, some people like to risk it and play fast and loose, but my thing is like, if you can keep it in some way that it's out of the way and not a bother, do it. I am a gig worker. Can I deduct mileage and parking expenses? Yes. With mileage, there's something called commuting mileage. So if you don't work from home, if your main home is not your business location. So for example, I have a construction business and I have Thompson and Brothers Construction, and I go to that office, and then from there I drive to Home Depot and other places and to different construction sites. Me driving from home to office is not deductible, but because that's considered commuting. But if your home is your main place of business, where you do a substantial amount of billing and invoicing and things like that, then you can consider driving from your home to any other location, a business trip, sorry, and parking as well. And then I also tried to sell products and I paid the listing fee on a website. There was a second part to the question. Whatever your question was, put it back in there. I promise I'll answer it. Emily, we're gonna have to have a chat about your lack of professionality. The San Diego Public Library is no, I'm just kidding. I don't know anyone there. I was just hoping that there's like a library rivalry. So you both have mascots. The tax bracket chart for 2026, I believe, has been released, so we should know how that all plays out. I will see if I can Google it quickly. But also, if you Google it, you should be able to find it. And if not, find me on the internet and I will apologize. Jeffrey Thompson. If you search Jeffrey Thompson tax, you should be able to find me. We got the minimum profit required before self-employment tax. Great. I've been making business purchases with my personal credit card because I don't have a business bank card or a business bank account card yet. How important is it to get a business bank account? Is this mainly to keep expenses separate and record keeping easier? Yes, I would say 90% of it is to keep expenses separate and make your record keeping easier. It really does make a big difference because like, hey, I went to Target in 11 months ago, and I cannot find the receipt because Jeff told me not to throw it away, but I did, right? But I put it on this business card, so if someone were to question it, at the very least, I have that. And if there's a hobby business consideration, having separate cards for your business as opposed to your personal expenses will show the IRS, hey, well, look, I have like good record keeping, so I'm conducting myself in a business-like manner. So you don't have to, but especially as your business grows, and especially if you're doing the thing at the end of the year where you're going through all of your expenses, I recommend doing it. And it's fun. Pick a card that you love. Um, Love this transition. Speaking of pizza, I'm new at this, and some people pay through various apps and say pizza in the description. I'm assuming that they're doing this as a way to help me avoid paying tax. It's weird. Yes. So this is the funny thing. A lot of people think that like Venmo and Zelle look at like there's like a guy at like Zelle going like, huh. This said pizza, but there's a winky face. This is probably for goods and services. Then they call the IRS, and the IRS picks up immediately. Hey, Jerry, I got another one. That's not how it works, right? When you select friends and family, it's assumed that it's friends and family. And when you select paying for services, it's paying for services. The other thing is when it's goods and services, Venmo will charge a fee, and so will PayPal. So they're probably trying to help you avoid that fee. The right thing for you to do is to report all income. I'm such a nerd, regardless of whether it's for pizza or for services rendered. But yeah, I pay my massage therapist for Venmo, and it's always pizza. Or sometimes it's like, thanks for helping me move, or thanks for cutting out that mole off my back. You got to have fun with it. They let you put whatever, so why not? You might also just have really funny clients. How tricky is it to claim product purchase for hobbies that you then use for your business for profit? So that's conversion. Now the if you do it in the same year, what I would do, so for example, let's say I bought a computer in January, start a business in June, and I'm using my computer now all the time, right? That's 50-50 use. It wasn't purchased originally with a business purpose, but I'm using it now for business. If it's something that you bought in a previous year, that's kind of tricky because technically what you'd want to do is you sell it to yourself, which you can't do because it cancels out and it is dumb for tax purposes. When you have a business, what people do with personal things that they're giving to the business is they put it into the business, and that affects like their basis in the ownership of the company, and it is helpful for tax purposes. Long story short, it doesn't. Just don't worry about it. And if you're going to spend something, if you're going to pay for something that's like ridiculously expensive, and you think that you might use it for business, just like hold off and then make sure that it's set up properly. I did another question pop up.
I do have the second half of that other question that I
Okay,
so
great.
rudely and very accidentally dismissed.
Emily!
So it said, I tried to sell products and I paid listing fees on a website, but I haven't sold a single thing. Can I deduct the listing fee?
So the theoretically, yes. So there are two considerations which I think you would meet. One is the argument that the business hasn't started yet, but there are really weird rules with startup expenses. But essentially, my argument is always, well, because startup expenses are basically pre-operational. So like if you think of like you see like the sign on a building like will be open in like 2 months and they're spending a lot of money to open the business, but they can't actually sell anything. That would mean that you're pre-operational, but you're not because you are ready to sell. So I would say in that situation, and also the other consideration is business or hobby, but 5 year look back period. Yes. Now, if you don't sell things for many years, one, I'm sorry, it's not you, it's them. They don't see your worth. But two, then you may, want to like look at how you're managing your business just in case anybody takes a look at it. But yeah, for this year, I wouldn't worry too much about it.
Well, I think those are all of our questions for the evening. I just want to say thank you so much, Jeffrey. You've been amazing, especially being under the weather. Thank you so much for patiently answering all those questions. Thank you for the overview. This was really fantastic. And I also want to say again, thank you to the California Lawyers for the Arts and Chloe in particular for making this happen. We are going to have a very quick survey that will pop up as soon as the webinar closes. So for those of you who have stuck around, please fill it out. It should be relatively brief. It will help us to inform our future programs. We are hoping to have more like this. So if you liked it, also give us feedback. If you would like to see more, if you want to see Jeffrey's face again, tell us that. I thought it was great. So, if you felt the same way, let us know. Yeah, I think that's it. Julianne, did you want to say anything before we close?
I just wanted to thank everyone for being here, and thank you, Jeffrey, for your time and expertise, and for making something that can be stressful or seem dry super exciting and fun. And you have a good sense of humor and kept us all engaged. There's lots of love in the chat. I hope you feel it.
I do. Thank you all for hanging out with me. I'm gonna go drink some more soup. If anyone needs a great homemade soup recipe, reach out to me. And it's
Ooh.
got radishes. You get them real soft. Yeah, we'll talk. But have a lovely night, everybody.
Thanks, everyone. Have a great night. Thank
Thank
you, Jeffrey.
you.